Hello all and welcome back to Finominal UK for another portfolio review. In today's review we're going to be taking a look at the City of London Investment Trust. So initially looking to the company's website here, where we can see they've got quite a very strong track record, a 59-year record of consecutive dividend growth they note, which is also the longest track record of any investment trust. Looking to the investment objectives of the company, it is to provide long-term growth in income and capital, principally by investments in equities listed on the London Stock Exchange. And we can see their objective here, income and growth, total assets just under 3 billion, so very popular investment trust with a very strong track record as well. Let's just scroll down now on the website here, where we can also note they publish the full breakdown of the trust's portfolio, which is brilliant. Nice that it's that accessible. Where we can see they initially show the top 10 holdings, but they do also allow view full portfolio holdings, which then goes into Excel. Now we have this, let's head over to Finominal for our full analysis. So the way I'll be analysing this is I initially use the AI document reader using the statement reader. With that download, I simply just drag that in to the statement reader, press analyse, and we can see that's pulled all of those holdings through here. You'll get a match confidence score. These show as low, but if we see the source name here, you can see this accordingly. I'm quite happy that these are correct, and I have checked this prior to recording for all the 78 holdings. But as you can see, it's quite a comfortable match, I would say. 100% there. Move the noggin out of the way. Press save and analyze. Give the portfolio name and save it to dashboard. What I've done since saving to dashboard, I've then created this as a dynamic portfolio. So if I go into the portfolio here, you will see the 78 holdings with the weights and such here, and I've rebalanced this in accordance with the date on that Excel we see, which I've got opened on the other screen there, which notes the 30th of April 2026 as the rebalance. Prior to that, I've then taken the ticker STY for the actual company's ticker, and with that 100% weight since the 1st of January 2000. So that gives us the full performance with the most recent rebalance data as well. Let me go back to the fund manager's website here. In regards to their fact sheet, they note their benchmark they're using is the FTSE All-Share Index. So perfect, a very sensible benchmark, I would say, and it is also the benchmark that we'll be using for our analysis. So with that said, let's continue now with our analysis using the portfolio analyzer. So initially looking at portfolio benchmarking, we can see it's got fees of 0.36%, so this is a very cheap, I would say, especially for an investment trust. We can see total returns over the last window we're looking at, 26.5 years, 453.21%, and that compares against the FTSE All-Share Index fee of 0.17% for this particular one. It's a HSBC fund where I'm using there as the benchmark. Total return for that's 281.74%. We can see a higher CAGR for the City of London Investment Trust of 6.7% versus the FTSE All-Share of 5.2%. Volatility has been higher though for the investment trust at 18.9% versus that of the FTSE All-Share at 16.8%. But that can certainly be down to the sort of concentrated amount of holdings versus the All-Share. Max drawdown has actually been less than the FTSE All-Share, with the investment trust at minus 42.02% and the FTSE All-Share being at minus 48.2%. So still quite a chunky max drawdown, I will note. And we can then see a Sharpe ratio of 0.22 versus that of the FTSE All-Share at 0.16. So from a Sharpe ratio perspective, it's not very strong, but this is quite a track record we're looking at in this data period. And we can see the performance benchmarking here as well against the FTSE All-Share, and we can see that excess returns as well. Now, just before I continue this analysis, I'm just going to change the window over a few time periods here. So, for example, if we wanted to look at from 2010. Let's set that accordingly just to see how that might look against the FTSE All-Share. And we continue to see outperformance there shown, so that's worth noting. But now let's also look to the last 5 years of how this might compare, how it did compare, should I say, against the FTSE All-Share Index. Very comparable, as we can see, but overall seeing a slight outperformance against that. So even from a sort of a longer time frame perspective, in addition to a shorter time frame perspective, we're seeing that sort of value creation, I would say. Let me reset this now, where we shall continue. And we can see the outperformance versus the FTSE All-Share Index year on year here. And we can see most recent years, last 3 years, we've seen outperformance. And we saw quite a stint of outperformance from 2010 to 2015, which is also worth noting. I'm going to look now at asset classes and markets, so 100% equities, as we'd expect. In regards to breakdown by market cap, 62% in large cap, 24% in mid and 14% in small, which lines with the company's investment objectives as well. In regards, they note that they mainly look for more stable large cap blue chip companies. And if we scroll down in regards to sort of geography, we've seen top 10 countries as 100% of the UK. But let's continue now. Let's look to sectors to see where these are at. So mainly in financials, which is no surprise, UK large caps, we're seeing 33.7% in financials, so sector bet there, and also in consumer staples, 18.5% in consumer staples, and then sort of residual amounts in energy, healthcare, industrials, and information tech. But the two main sort of sector bets here would be financials and consumer staples. And we can see that comparable against the FTSE All-Share Index, where we have got that overweight in financials at 6.6% versus the FTSE All-Share, as well as an overweight in consumer staples against the FTSE All-Share at a 5.2% difference as well. We can also see an underweight in industrials versus the FTSE All-Share at a minus 5.3% difference there. Okay. Well, let's continue now. We can look to the top 10 holdings. We've got HSBC Holdings, Shell, Bay, NatWest, Tesco's, Lloyds Bank. So, very large cap, household names you'd expect to see to be noted. Let's head over now to risk analytics, where we'll look at factor contribution analysis. Let's initially look to the summary page, where once loaded, we shall see. So in regards to risk contribution, we can see that just over half of the risk is coming from the MSCI ACWI index, so global stock markets, where the fund manager does note, whilst it's on investing companies on the London Stock Exchange Group, most of that revenue does come from overseas as well. So that's why we may see that risk contribution as that. We've also got 18.9% from the UK, which expect to see, as well as Finominal UK Consumer Cyclical Sector Index at 5.3%, and Finominal UK Financial Sectors Index at 6.5%. And we can see idiosyncratic risk contribution at 15.5%. So for the sort of fund manager giving that sort of value, so to say. And we can also see a return contribution there as well. But I will continue with the analysis, where I will actually go to drawdowns and scenario analysis to see how this is compared against the FTSE All-Share. Using actual returns, because we've got such a long track record, you don't need to replicate anything at all. Overall, it's been quite close in tracking with that of the FTSE All-Share, though I can certainly see sort of value add around where are we here? Towards the start of 2000, sort of 2002 area, where we did see not as deeper drawdowns as the FTSE All-Share Index, and you can see right in front of us, though very similar to that of the FTSE All-Share for 2008 area, of course, mainly in financials as well. And we can also see the scenario analysis here. So during the GFC, if it was in the City of London Investment Trust, you would actually seen lesser drawdowns than that of the FTSE All-Share, with Lehman bankruptcy being minus 37% drawdown versus the FTSE All-Share Index at minus 44%. Okay. Let's continue now, where I'm actually going to go over to portfolio simplification. Can this portfolio be simplified from these number of holdings? And we can see this can be simplified with the holdings shown here. So, MSCI Target UK Real Estate, FTSE 100, and MSCI UK Small Cap uses as well. So whilst we can look to that simplified portfolio, we can see the difference shown here against that. You can see the difference in CAGRs, sharp, though overall the City of London Investment Trust, even over the time period we're looking at, it's quite short, I will note, because I imagine these are some new ETFs, April 2025, so a considerable sharp ratio, 1.68, but we can't really look at that. So I'm going to go back over now to the overview tab, portfolio benchmarking, to conclude my analysis. And overall, for the City of London Investment Trust, it is positive. I would note, certainly good fees, 0.36%. CAGR hasn't been that great in regards to since in inception date. Dividend yield has been good though, 4.12%. So we're seeing cheap fees. Overall, getting a good amount of dividend yield as well, a higher CAGR than that of the FTSE All-Share Index, though that has come with slightly higher volatility, though we've also seen max drawdown protection against that of the FTSE All-Share Index as well. So overall, a positive piece of analysis for this investment trust, and as mentioned, it's the one with the longest track record as well of investment trusts, and we can see it's given a good amount of dividend yield and good fees as well, is what I would note. But that brings me to the end of this analysis. I do hope that was helpful and informative. And if there are any other funds or portfolios or investment trusts you would like me to view next, please let me know in the comments. All right, thanks all.